Dell released their latest quarterly figures Tuesday after the market closed, and well, at the time of making this video, the stock is down 11 to 12% or so. A revenue miss, guidance miss as well by around $1 billion. Now, the big question, of course, that everybody's been asking is, how can that be, right? With all the demand for AI, Hopper, Blackwell, wouldn't you think that growth should continue? Wouldn't you think that guidance should have been raised or at least met, right? Well, during the earnings call, Blackwell was mentioned 10 times. We're going to go over a couple of comments that were mentioned during the earnings call. Also want to cover Dell's quarter because all in all, despite the stock's reaction, there are still a lot of things that are going the right way for that company, and maybe this is a buy the dip opportunity if you are a Dell shareholder, if you're interested in that company. Now, on the flip side, we have, of course, the SMCI saga that we've covered on this channel. Now, SMCI, since the lows, around $17, $18 or so, has basically doubled in stock price. What has changed? Well, a little bit of sentiment change, but all in all, we're still waiting for them to file the 10K and the 10Q. Remains to be seen when that will happen. But you would also think that because of everything that's happened with SMCI, that it would benefit a company like Dell, correct? Well, we're not seeing it just yet. But what we did see is the same comments that were made during the SMCI call with regards to Blackwell were also made in the Dell earnings call. So yes, maybe Blackwell was delayed and still is, because if that was not the case, then the comments would have been a little bit different in those earnings calls. Anyways, let's dive right into this. If you enjoy this type of videos, leave it a thumbs up, subscribe if not. We're going to do a separate video purely talking about Nvidia because that stock has been going down a little bit, but for the last couple of days, well, actually since the earnings report. Let's talk about sentiment around Nvidia and all of that. That will be later throughout the day. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, Dell Technologies here, stocks reaction down close to 12%. Market cap was close to $100 billion. That's going to be a bit less. Year to date, the stock has done tremendously. Now we're back to prices not seen, well, since a month ago. So really nothing that dramatic. Forward P is 15.5 times, but these types of businesses don't really deserve that high of a premium because it is quite a low margin business. A bit higher overall than SMCI, but still low margin business. The company, well, analysts are expecting it to grow high single digits, let's say, for the coming 2 fiscal years for sales. EPS expected to grow a bit faster than that. Now, currently, the average analyst price target is still not updated, but you can see here already a couple of analysts that are changing their price target. Most of them are lowering it a little bit, but still, most of them have it higher than the price we're at pre-market. From a pricing standpoint, so forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, yes, it is higher than the 5-year mean because, well, the market is giving this one a higher premium than previously, not as high as, well, the average market, but higher than their own mean. And so let's start with 2 comments here. AI is a robust opportunity for us with no signs of slowing down. That's Jeff Clark, Vice Chairman and COO of Dell. Interest in our portfolio is at an all-time high, driving record AI server orders demand of $3.6 billion in Q3 and a pipeline that grew more than 50% with growth across all customer types. So what do we get? We see that, well, first of all, if you are not familiar, we have here 2 business segments. One ISG, which is Infrastructure Solutions Group, and the other one is Client Solution Group. So the first one, we've seen an increase here of 34% year over year. No surprise there, the big increase coming from servers and networking, that's up 58% year over year. What we've also seen is that, well, margins here is higher. So we went from 12.6% same quarter last year to now 13.3%. As for the client solution group, a bit of a different story, and that's why revenue did miss and guidance is also a little bit lower. That's because, well, we see consumer one is not growing as quickly as expected, right? That refresh cycle that was expected is slower than expected. We've heard those comments from AMD and Intel as well. And most of them are saying that, well, they should see this turn into a tailwind later in 2025. So consumer here is down 18%, commercial is up 3%, and there are some positive signs there for Intel and AMD, especially on the server side of things. And so here, what do we see? Well, we see the CSG operating income actually come down 25% year over year. And so the percentage of net revenue, the margins basically went from 7.5% to now 5.7%. All in all, net revenue increased 10% year over year to $24.36 billion. Operating income is up 12% year over year. Net income, same thing. With regards to adjusted free cash flow, that's down 17% year over year to $716 million. Now, free cash flow for the quarter was $914 million. That's up from $704 million last quarter. And adjusted free cash flow, the reason why this is down is because of financing receivables negative impact in this quarter. As for guidance for Q4, they expect revenue to be in the range of $24 to $25 billion with a midpoint of $24.5 billion and 10% growth. That's basically a miss of $1 billion. Yes, the number expected was 25.5, closer to that. So quite a big miss. Non-GAAP diluted EPS was also a small miss here. They expect here $2.50. As for the fiscal year 2026, by the way, this was their Q3 fiscal year 2025. So fiscal year 2026 is basically 2 quarters from now. So they expect multiple tailwinds that support growth next year. One, more robust AI demand with a strong 5-quarter pipeline going into next year. An age install base in both PCs and traditional servers prime for refresh. We know we're going to have also Windows 12. And so that will help companies like Dell, will also help companies like AMD and Intel. They expect CSG to grow as enterprise companies refresh a large and aging install base, expect to continue to balance growth and profitability, managing price with the competitive landscape and input cost environment. And so jumping into the comments that were made during the earnings call, which are always, of course, more interesting. So a couple of things here. One, as for Blackwell, so what they saw in Q3 is a shift, and a pretty rapid shift of the orders moving towards the Blackwell design. The specific one that you called out, the GB200, that's now on backlog. So the backlog in orders for the quarter, without giving you a specific percentage, was a significant portion of the demand and now is a significant portion of the backlog. We are ready to go. Blackwell is in production. It will continue to ramp and will be ready. Then Jeff Clark here says a couple of minutes later, on the AI shipments in Q4, in our guidance, we've given the best reflection of what that backlog that's on the GB200 clears in the quarter, as it's now Blackwell is in production and ramping, in our ability to translate that into shipment, as well as the existing backlog on Hopper. It's our best indication of what we believe will shift in the quarter, and that's what's reflected. So again, a lot of unclear answers with regards to Blackwell. It seems like nobody wants to tell us really point blank, Blackwell, yes, Blackwell is delayed. There are some struggles there, and that's why we're seeing a guidance lower than expected. Then switching to another analyst, basically pushing towards the same type of questions. So I wanted to ask about the comments around AI servers revenue being down sequentially next quarter despite the backlog growth this quarter. First, is that just because of the growing mix of Blackwell and component availability? By the way, Blackwell does use a lot more memory. So yeah, there is some problem with Samsung. Nvidia is trying to get more from SK Hynix in the meantime. So that definitely does not help the whole Blackwell is delayed cause. In your view, is the backlog unusually high and we will see AI server backlog flush at some point, or is $4.5 billion in the backlog normal with the potential to grow larger? So again, he tries to answer and says to be clear, although they've not really been that clear throughout the whole call. As the order shift in Q3 shifted dramatically towards Blackwell, that product is in ramp and production, and obviously our backlog reflects when we believe we're going to get the parts and be able to ship them. We've translated that into our Q4 guidance. It's down slightly quarter over quarter in shipments from Q3 to Q4. The 5-quarter pipeline grew in excess of 50%. We're going to continue to work to convert that pipeline, and I would expect us to continue to grow. So it's definitely an interesting situation that nobody really wants to make a clear point here, because we've heard Nvidia say everything is fine, right? They actually expect more Blackwell revenue in Q4 than previously. But then you hear the folks like Dell and SMCI saying that, well, we are still waiting. We are waiting on Nvidia, we're ready, but it really doesn't depend on us. It depends on them. A couple of components here as well. So yeah, it's very, very strange. Because remember, during the SMCI call, we've had basically the same thing here. So a question was asked. Firstly, can you kind of double click on which quarter do you think that you will start booking the Blackwell revenue? Last time you guys alluded to sometimes in the June quarter. Just curious whether this is still on track, just any kind of high level terms of when do you think the Blackwell is going to show up in the P&L. So Charles here answers, yes, very big question. Indeed, we're asking Nvidia every day. So I hope their production can go smooth and go for high volume very soon. So yeah, to me, it's a bit strange because we're getting very positive signs from Jensen Huang saying that there are no issues, etc., etc. But then on the flip side, we first had reports of Blackwell being delayed. Then we've had reports of heating issues, right? Overheating issues. And then you hear comments from Dell and SMCI saying that, look, we are waiting. So, I mean, there's definitely something going on there. Now, I don't know what's going to happen throughout the quarter. Maybe they'll be able to push out a lot of Blackwell in January, right? A late push. That could happen. But right now, it does seem, just by reading these comments, that, well, there is a small issue here. And like I said, in Blackwell, you need a lot more components, you need a lot more chips, a lot more memory. So yeah, when you have issues with the likes of Samsung, that does not help the cause. And so right now, if we look at Dell stock, it's at $125. Again, price is not seen since, well, the end of October. We are going to be under the 20 and the 50-day moving average. So yeah, I would say if you would like to be opportunistic and if the stock does not rebound immediately during the day, then I would say look out for $115 or so, because that's where the 200-day moving average sits at. A strong rebound there could be a very, very good indication and a very good entry point in my opinion. But overall, I think the long-term thesis for Dell, for example, still remains unchanged. I think there is real demand for Blackwell, quite a lot actually. And yeah, maybe there is a delay, but a delay is, in my opinion, just an opportunity to buy shares at a cheaper price, because a delay does not mean that this is canceled. No, this means that, okay, for one quarter, we're going to be weaker than expected, but then everything after that is going to be business as usual. You might play the devil's advocate and say here, okay, Blackwell might be delayed, but how come there is not enough demand for Hopper, right? Couldn't Hopper in the meantime maybe replace the Blackwell demand, since that one is so-called delayed? Yeah, that could also be a good argument, although I would say that because Blackwell is just around the corner, probably a lot of folks are saying, okay, we're going to, let's say, ditch Hopper and go for Blackwell directly. Fair point, right? Fair point. So all in all, those are just my thoughts right now. Interesting situation. And maybe that's also why we've seen a little bit of weakness in Nvidia stock. But more on that in a different video. Share your thoughts down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.